All right, hola guys, ¿qué pasó? How's everyone doing? This is Hala Pablo. Thank you for tuning in. Let's do a quick Bitcoin update. So we've fallen into a deeper pocket. Yeah. So if you recall, when we started tracking Bitcoin from the top about 3 weeks ago, we dealt primarily with the 400 and the 200 daily moving average. Okay, so 200 being the blue, the 400 being the gold, and remember we focused on that, on the pocket between the two and the 4. Let's see, I have this on a 2 week, and so I said if we fall between the 2 and the 4, then the 4 usually acts as a very, very strong floor that we've had since like May of 2023. So we had this macro bull run, right? And so we bounced 1, 2, 3 times in a macro sense off the 400. And so we were looking to have a repeat performance of that. But when we fell through the 400, which we did conclusively, obviously, I mean, this is a strong supply candle. This is a strong bear candle, and we've had 3. This is 2, 4. This is 6 weeks of high supply volume. Yeah, so this is pretty conclusive. Okay, this isn't just maybe it's a fake out or whatever. No, this is actual supply coming in. This is real substantial supply, and so you could say that we've fallen securely beneath the 400. Daily. And so now that we've fallen beneath the daily and we're into the 80s now, we've transcended this pocket, and now we've entered into another pocket which I'm going to put a new floor now down as the 200 weekly. Now that's this here, this gray line, and we can get rid of the 200 day. Because that is so far up and above, it's in a galaxy far, far away. We don't have to worry about that for now. It's just extra noise on our charts. So now we're going to be dealing with the pocket of the 400 daily and the 200 weekly. And so we look at the past history of what Bitcoin has done. I have this on the logarithmic now chart, and so we see that we've fallen down. Notice that the 200 weekly has always been up since Bitcoin's inception, right? Back in like whatever 2009 or whenever. It's been up. It's rare where Bitcoin has fallen beneath it, but even when it's gone through it, it hasn't changed its upward trajectory. So it's gone up in like lazy patterns and lazy curves, but it's been up, 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 as opposed to the 400, which has been down and up and down and up. And then of course the 200 daily, which is even faster. It's not as smooth. It's up and down, up and down, up and down everywhere, snaking all over the place. But the 200 weekly has just been up. So we're going to use the 200 now as kind of like as a floor. Now we're going to go and look at the fractals now for 2022. The excuse me, the fractal is still valid, as you can see. We've come down off the UTAD. What I've done is I've anchored a second anchored VWAP to the UTAD off the 2022 fractal and today's fractal, or like the current fractal that we have today, and we notice that the interplay between the two volume weighted average prices are the same. At this second LPSY, we had the crossover where this pale blue ice came down beneath the darker blue ice, and we've had the redistribution coming down like this. We have a macro trend kind of resistance line coming down like this, and the same macro trend resistance line coming down like that. So ostensibly we've arrived at another selling climax. This we know is the redistribution we just came out of, where we were unable to go up through the macro trend resistance, and we came down and we have we'll call this a secondary test up on top, and then we'll call this the automatic rally secondary test selling climax. So we have the 3 distinguishing features of every Wyckoff range. And so For now, we're going to call this area the secondary test, kind of like what we called here. I'll just do it. Here's the ST from 2022. This is this touchdown here, and that kind of corresponds to this ST here. If we're keeping in accordance with the fractals, the way it's been going so far, this would be the SC here, SC, this first touchdown here, and then the AR up on top. I'll just put AR here, AR up here, not far from the macro trend resistance line up on top. Now you notice about 4 years ago we had a rising wedge kind of that came out and then retraced even more as we went back into the range. Here, let me see this kind of like a rising wedge. I don't know, I could see these things pop out at me, but I don't know if they pop out for you. But here's the wedge at the beginning of this trading range. And so it's possible we can kind of expect something like this to happen, or maybe not. It's not etched in stone, obviously, but if we come up and we start coming up to do like an up thrust, have some up thrust action here, then we'll be able to connect the highs on a micro rising wedge that more or less could replicate kind of what we saw 4 years ago. And why not? I mean, so far the waves have been kind of in step with each other. So we're going to look at that. We certainly have preponderance or predominance of supply volume in the vertical bar. Now we came off of that. This is the macro, going back to the macro with the 200 weekly, and we're going to go here now with the cumulative value days destroyed. Yeah, so those of you who've been following this channel are familiar with these two charts. We have the tops, this is the price action on top. The last two cycle tops of each range has been going up. That's the price is being demand is coming in, but what's happening is the smart money, institutional order flow and such, they are exiting their positions, and that's what's causing the cumulative value days destroyed, the hodl positions to decrease in value while the actual price action increases. It's an unsustainable pump, and then we see the sell-off that came afterwards, like we saw back 4 years ago. And this is the redistribution range that we're looking at in fractal format from 2022. We see that it came up here, touched the 400 in much the same way it did here. It touched the 400 and came down. And so we're following that. It came down here all the way to the, now remember, this is the 200 weekly. It came all the way down and touched the 200 weekly. Now remember, we're in this new pocket between the 400 daily and the 200 weekly. And so let's fast forward now to where we are today. We are in the pocket. We are in the pocket coming out of a bearish divergence between the price action and the cumulative value days destroyed. And we are conclusively down with supply predominance. This is building supply, so we have correlation. Actually, we have divergence between the building supply in the vertical bar volume and the downward price action. So that equates to bearish strength or bearish legitimacy as far as seller strength. So, you know, you're not imagining this. I'm not imagining it. It's actually playing out in the metrics, in the VSA metrics as well. So now it just remains to be seen, what are we going to do in this pocket? Could we eventually come down, maybe make a stab at the 400 again? Remember, we likened the 400 daily as an iron dome. Come down, reject if we're not able to go through it, and flip it to support, come down. I do believe that there's a very good case that we could be putting out feelers for the 200 weekly. Currently the 200 weekly is at 55,000, 55.5. I'm not saying we're going to hit that this year, especially if we're going off what we saw with the fractals. The fractals, you know, we had a range, we had a period of consolidation. Remember, we had this micro rising wedge, and then it came back down. It kept this floor for a little bit, but eventually we had a shakeout area here, and this was, if you recall, back to 16,000, and this was the actual bottom of the of that macro bear market, bear winter. So let me see here. So we noticed that the 400 everywhere historically where we've seen the bottoms of the macro on the cumulative value days destroyed has been where these green bottoms have hugged the 200. We see that back in 2019. All this down here, this was on the 200 weekly. This here, this green spike was under the 200 weekly. The one that we had before the golden cross back in December of 22, this was here. This was at and under the 200 weekly moving average. So it's not foreign for the price after making, I don't know how, what the percentage was since 2023 of the bull market, how much we pumped. We'll go off the golden cross area. We'll say or somewhere here. I mean, we've gone up, what, 400%, over 400%. So it wouldn't be out of the norm for Bitcoin to have a major correction at this point. Who knows? But then we got the whole factor with the $2,000 stimulus checks that President Trump has promised certain income bracket families for next year. So that may feed liquidity into Bitcoin and cause it to pump. But nevertheless, whatever happens, I do think that we're going to spend some time in the pocket that we're currently in and get closer perhaps to the 200 weekly moving average. Look for these averages, especially the 400 and the 200 weekly, to kind of converge, get closer together. That'll kind of clue us in. We see it here, how the 200 and the 400 kind of got closer and closer together now. Don't get the 200 confused. When I say 200, it's not 200 daily, it's 200 weekly now. So this is a very, very solid floor. In Bitcoin's entire history, the price has never gone really more than 30% deeper than the 200 weekly moving average. You can go and just measure it out for yourself. I don't want to do it on this video. I've already done it, but it'll just make this video go on too long, which I think it already has. But anyway, that's about all I've got for the time. I'm going to let you guys go. I got stuff to do today. We're currently at 89,000, and so don't be surprised if we come back up to mitigate the automatic rally range of around 93.5 from here, and start getting a little series of higher highs and higher lows. But watch for the price to constrict, which is indicative of a rising wedge, and then a subsequent sell-off back down into the range. This floor here that we have now at 89, let's just call it 89. It's been pretty strong so far. So I kind of see us keeping it for now until things change. So I'm looking just for interplay between 89,000 and 93.5. So look for consolidation, and yeah, if I see anything else noteworthy, I'll let you all know. Until then, God bless you all. Have a great day. Talk to you soon. Stay safe in the markets. None of what you've heard here is financial advice or what you've seen on the charts. It's all for educational use only, but you already know that, right? All right, man. God bless you. Talk to you soon. Bye-bye.